Today we're going to throw it in reverse to try and help people stay in their homes. A few minutes ago, I spoke about the growing number of Americans underwater on their mortgages, faced with foreclosure. Well, there are a number of options out there to help you save your home, including the reverse mortgage. And here now to go over the basics is Sandra, Rostek, Vice President of the Reverse Mortgage Division at Intercounty Mortgage in Hazlitt. You also do reverse mortgages for Lakeland Bank.
That's right.
Thank you so much for coming on the show.
Thanks for having me.
Let's start with the basics. A lot of people hear the term reverse mortgage and they have very strong feelings one way or another. Yeah. There are a lot of misconceptions out there about reverse mortgages. What are they?
Well, a lot of people think that the bank winds up with the house in the end, and that's not true. It's just the mortgage. It's a government-insured reverse mortgage for borrowers that are over 62 years old, and it allows them to take equity out of their home, and much like any other equity line, but they don't have to qualify for it. They don't have to have income because there's never a payment. It doesn't have to be repaid until the house is sold or the borrower dies.
Okay, so you said 62 years old, but who were they for and who were they not for, in your opinion?
Well, I think that they're not for the people that want to leave the house with no mortgages to their children and their heirs, but for the people that are in their home and really just need to do some repairs on their house. Maybe they're behind on a small mortgage. Most of the seniors that I talk to that are in foreclosure, they're losing their house for $40,000. It's ridiculous. But they can't qualify for traditional financing. So they can get a reverse mortgage without having to go through the credit checks or income checks. And further, when their house is really in disrepair, they can't get a traditional mortgage on that either, where with the reverse mortgage, we can give them the money to fix up the house.
Let's get to the disrepair in a moment, but first, you were talking about no credit or income verification checks. Is that something that you think keeps a lot of seniors away because they feel as though they're going to need to provide this information?
Sure. I mean, I have seniors that are losing their houses for tax sale, and they don't go for a reverse mortgage because they think they can't qualify. And just by being 62 years old and having enough equity means you qualify for this loan. So it's really the only loan in the country that you can bail out of foreclosure right now. Getting mortgages is getting tougher and tougher, but not for the seniors.
All right, let's get back to the issue of homes being in disrepair. We have some pictures. We'd like to throw the first one up on the screen right now because there are a lot of people and a lot of homes that have not been updated at all for years. This probably goes beyond updating, though. Here's the first picture.
Right. This was a lovely lady in Woodbridge. You can see that her cabinet doors are falling off in the kitchen. And most importantly, the bathroom was just wrecked. I mean, I was afraid to think of her even going into that bathroom. It was leaking down through the garage. When they take a shower, run down the driveway. And I'm thinking to myself, why are they living like this?
Here's the last picture.
Yeah, I mean, that's the basement. It would run down through the basement, down the driveway. How humiliating and dangerous. I mean, when you have that kind of water damage, somebody's falling through a floor someday. You got to fix these houses. They can't stay in them like that.
How much of an uptick in business in terms of reverse mortgages have you seen in maybe the past 2 years or past 3 years since the housing market really started hurting?
Well, the FHA reports that reverse mortgages are being taken tenfold since its inception in 1988. It's been around for a long time, but everybody just stayed away from it. They thought it was a bad loan, and it's not a horrible loan. It's an expensive loan product. The closing costs are a little high, but when it's right, I mean, rather than living like they're living, it makes sense for them to be able to take some equity out of the house and fix it up.
All right, so you said the closing costs are a little high. What qualifies as a little high in your opinion?
They range from like $13,000 average. They can go up to $21,000. So it gets financed in, so the senior doesn't have to pay for it. But nevertheless, you don't want to spend that much in closing costs to buy a car, for example. It'll be the most expensive car you ever buy. But if you need the car, plus you need to have an equity line of $200,000 as a big giant safety net, then that's the right choice for you. Set up the reverse mortgage. You don't have to take money you don't need.
Are there any other downsides of the reverse mortgage? You mentioned the upsides, and then we spoke about the closing costs being expensive. So that's a downside. Any others?
Well, seniors sometimes they use the money foolishly, a little too fast. They think that they're going to die next year, and they decide to take the whole family to Europe or something ridiculous. But we really try to counsel our borrowers and tell them, hang on to every penny you have, because 10 years from now you're going to need the handicap ramp, and that's all you have. That might be the only money you're going to see out of your house in your lifetime. If you're going to stay there until you die, this is what you got. Hang on to it. The children living in the home, we always advise children, try to avoid the reverse mortgage. If you want to just keep on staying in this house after your mom dies, you don't want to take a reverse mortgage because you can't stay in that reverse mortgage.
Well, let's say a senior does take advantage of a reverse mortgage. There has been conventional thinking for quite some time now that puts a rather large burden on the heirs and the survivors. So talk about that a little bit.
Well, it doesn't really. I mean, most of my seniors, when they pass away, their kids are going to inherit the house, they're going to sell the house, they're going to pay off the mortgage. You only owe what you've taken plus interest and the closing costs, and they keep the rest. There's a big cushion of equity built in there, so they're still going to inherit money. And to be very honest with you, it's mostly the kids that are calling us because mom doesn't have enough money to fill up the oil tank this winter. You know, even with heating prices coming down, it's still burdensome. If they're on Social Security, they might not be able to stay warm enough. And you know, I'm 40 years old, and I've got my own utility bills. I would love to fill up my own mother's oil tank, but who can afford that? So, you know, for the kids to set up this reverse mortgage, to know that their parents are okay, is really what's most important to them. They don't care about the inheritance, but they'll still get, you know.
All right, Sandra Rostek from Intercounty Mortgage, thank you so much for coming onto the
Thanks,
show.
Eric.
And if you have any questions or comments about anything you've seen in today's show, send them to me at itsyourmoney@news12.com. We'll be right back right after this. Stay with us.